day.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
The market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.
This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Just before I start today's video, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screens. But let's talk about the Nasdaq100. The Nasdaq100 currently trading at around 10,850, a very muted trading session. We haven't really done much during today's trading session, but I kind of want to start by talking about this broken down ABC pattern that, that initially looked like it was forming, but of course that B leg kind of got wiped out due to the fact we took out the lows of this A leg. So, it's kind of problematic due to the fact we did take out those lows, and you could argue that this ABC correction just isn't really a thing anymore. But then, on the flip side, we go over to the S&P 500, and this B leg actually did hold. And, we go over to the Dow Jones 30 as well, and look, even better, we did hold. So I just want to, quickly talk about the S&P 500 and the Nasdaq 100. Of course, they're very well correlated. And I think to kind of have a real understanding about this broken down ABC pattern is if we go over to the value line geometric index, and this is basically everything that's in the S&P 500 except from technology. And as you can see, last Monday and Tuesday we had some really strong gains which took us towards that 525 level, and of course the last 4 days has been horrible. We've basically broken down, but we're only really trading just below Tuesday's swing low. So it kind of shows you that not all is lost. We haven't really taken out, and I feel like showing you this index is a lot clearer than just showing you the S&P 500. So what I'm trying to argue is that yes, Nasdaq 100 is extremely volatile at this moment in time, and that's due to the fact the VIX, look at the VIX, we're currently trading up at around 33.55. So this indicates that on any particular day the Nasdaq 100 is likely to move anywhere between 2 to 3%. So extremely volatile, and we have gone and taken out that A leg on the ABC correction. But also just want to show you this as well. This is the AAII sentiment survey, and it just basically tells you the current sentiment in the market. Is it bullish? Is it bearish? And last week we had our most bearish reading, which was minus 43%, which takes us all the way back to 1990, guys. 1990. That's over 30 years, 32 years since we've been this bearish. And as you can see, in 1990, what happened? We had a very fast snap up in the markets. And that's what I'm looking for here in the Nasdaq 100 in the coming days, with all the cycles are coming to an end. And I am anticipating a very aggressive snap towards the upside. Am I saying that the Nasdaq 100 isn't going to be trading lower than where we are right now, and it's from here onwards is off to the races? Absolutely not. That's not what I'm saying. But what you should understand is that the markets can't always just move in one direction. They don't just move down and they don't just move up. Even though we've been in a bear market for the past 9 months now, we do occasionally have these very nice attractive 25% pops in the market, and this is huge, right? In the space of 1 month, we're seeing returns that you would normally see in, or be lucky to see in the whole time of 1 year. In a whole period of 1 year. So that's what I'm kind of hoping for now. I'm looking for that next bear market rally that I can take advantage of. And then, once we get up to that 50 and 200-day EMA and it's looking like it's going to roll over, that's when I want to make the choice whether to start selling or whether to hold my buys, etc. But I feel like I just need to bring up these free markets really quick. We've got the dollar index that continues to trade towards the upside, but we are starting to look very exhausted. As you can see, the momentum in this current asset is really starting to phase off. And I did say this over on my free Telegram group chat that the dollar was looking like it was about to roll over. We did, I did anticipate another retest of the highs. We're not quite there, but we're just below, and you could potentially argue if it was to break down from here that we did go and retest the highs. Furthermore, I feel like this is probably one of the most important charts out there right now. This is the 10-year Treasury yield bond here over in the US. I was calling for a retest of the highs. We got that, and it looks like we are really starting to fade down towards the downside here now that we have gone and officially retested those highs. So this is the chart that I'm really looking to break down in the next couple of days, and I feel like that's going to give a massive boost to the stock market and the Nasdaq 100, of course. And third of all, last but not least, is the VIX. The VIX, as I mentioned during yesterday's video, guys, when the VIX has traded above 34, it's been a fantastic buy signal this year, and when it trades below 20, that's when you should be selling stocks. So you buy above 34, you sell below 20, and that strategy's worked very well, as it predicted perfectly that June 16th, there you go, the June 16th signal. And that, of course, if we go to the Nasdaq 100, where was June 16th? It was all the way down here, which sparked that 25% rally here in the Nasdaq 100. So am I saying that we're about to see a 25% pop in the Nasdaq 100? No, that's not what I'm saying. But what I am saying is that history will tell you that when the VIX has gone to 34 or above 34, it has been a fantastic buying signal. So, furthermore, I just want to touch on the CPI reading that we are getting tomorrow. Of course, that is going to dictate where this market goes. If the reading comes in less or lower than expected, then you can expect equities to have a rip your face off rally towards the upside. But vice versa, if the number comes in hotter than expected, then you can expect this thing to crash. So, with all my cycles coming to an end, during this trading session and then going into tomorrow, it does suggest that we are due a very large rally towards the upside. Is it going to be the CPI that causes that rip your face off rally towards the upside? I don't know. Unfortunately, I do not have a crystal ball. Your guess is as good as mine, but it might not be the CPI reading, guys. It could be something to do with cracks starting to show it in the financial system over in the UK with the IMF coming out yesterday saying, central banks need to work with governments and central banks really need to start taking their foot off the gas. And that could potentially force a Fed pivot. So I feel like there's plenty of catalysts out there now for that Fed to take their foot off the gas, for us to see less aggressive interest rate hikes. And as soon as we get mention of that, that's when you can expect the Nasdaq 100 to rally significantly.
There's apples under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it.